Hi everyone, Joe Biden is definitely pissed, okay? You can see the later report, okay? Why? Because OPEC has decided to basically scale down their operation. They want to reduce the number of barrels that's produced every single day to as much as 2 million barrels. Oh my god, this is bad. And the thing is, at the same time itself, right, the US jobs opening is down, and the percentage is not little, but in fact it's a bit of scary in fact. And if crude oil goes to 96.22 based on the Fibonacci, then whatever effort that this Joe Biden has been doing is really going to be totally wasted. And let me explain to you more in detail right now, okay? Let's go. Okay, the thing is this, before we enter the thing here itself, do understand this risk assessment is always very important. Do understand this, do your risk assessment, and thank you AIMS for the kind sponsorship. Okay, now first of all, this viral article have been going around and I think it's ridiculous. Now first of all, we have this particular organization called the UN Conference on Trade and Development, short form UNCTAD, says that we are going to enter a potential global recession and stagnation. Now come on guys, since January this year, I have been repeating like a broken recorder that we're going to see a global recession. Now I did not say a US recession, I gave a global recession. Now it's already October, and then now this organization is coming in and tell the whole world that, you know what, central banks around the whole world, you need to reduce or stop your rate hike. I think it's ridiculous. Yes, we understand that there is a chance that we will see a world economy going into recession, but we all have known that. This is not going to be this is not something new or something that you not know. As a matter of fact itself, right, we can actually see that this is ongoing right now. So think about this. Would the Federal Reserve even bother to listen to anyone here? Do you think so? I don't think so, guys. I really don't think so. And this is going to be crazy here itself. And look at it itself, right? Think about this. If Federal Reserve has already mentioned in their minutes, they are not going to look at any rate cuts until 2024. And that's the reason why the market came off. And now, are you telling me that the Federal Reserve will listen to the UN? I don't think so, right? If UN really can work, there will be no wars at the moment right now between Russia and Ukraine. Think about this for a moment, okay? Alright, so with this ongoing right now, Amazon, Google, Lyft, all these companies are now extending their hiring freeze. And that means that we're going to see more people out of job. And if people are getting out of job, then what do you expect to happen? That's the economy will suffer, because that is the objective of the Federal Reserve. So let's take a look right now. Look at it, okay? The last time we see something like this itself, right? Take a look here. Okay, we have a very incredible momentum downwards like this right now happening, okay? And this is the biggest monthly drop on record outside pandemic, which means the last time it was during the pandemic time. So think about this right now. This is actually reflecting that Federal Reserve, once they increase interest rate, once the stock market pulls back, people stop hiring, definitely we're going to see the big thing. Because the last time we saw something of this magnitude itself, it was a recession. So which means that now we're going to see a recession very, very soon. And this cannot be avoided. Okay? Alright. So you can see over here, let me just clear my chart a little bit. Okay. You can see over here now the job opening versus the unemployed person, okay? You can see now it's actually moving up, okay? Because the job openings are going down. Can you see now? And 4 million more jobs opening than the employed. Yes, there are still more jobs, but it's reducing already. So all these tells you that, right, the availability of jobs now, although it's still there, but it's reducing. And people are getting unemployed. And this is the problem here. Then you may ask the question, how can that be? Well, selection of jobs. Certain people just don't want to go for certain jobs, and therefore they rather stay and wait for a while. And because of that, it doesn't contribute to the economy. So because of all this information right now, right, you can see that the job hires versus a 12-month accumulative change in the payroll has shown a downside movement right now, okay? This actually tells you that it's actually going down. The hires are going downwards at a very fast speed. The last time we saw something like this was back during the 19 and 20 pandemic period, because all along itself, right, this had been mounting up. Can you see that? So now you must understand that whatever Federal Reserve is doing now is actually really happening? So let's take a look at what happened yesterday. Okay, before that, on Monday, we saw the ISM manufacturing PMI has went down. Okay, so again, that shows you the economy is slowing down. Okay, yes, Federal Reserve, the reason for why they are trying to increase interest rate is to slow down the economy. But when you slow down the economy, you know that the next thing will happen, right? Exactly, recession. So this is the one that I'm concerned. Now, usually I don't cover this part, but yesterday when I saw the drop, wow, look at it. The price was 11.17, okay? Now, the market was expecting a drop. We understand that. But the thing is this, it was like, 10.77 million, right? My God, look at the number. It came out 10.05. That means it was a jump down of 10%, okay? Now, this is crazy. This is really crazy. So now you look back here itself, right? This is the numbers right now, reflective itself, right? The jump here is really, really bad. The last time of such a magnitude was back in this 2020 period. Okay. Now, there's something that I want to show you before I move into this. Now, this coming, which is today, we will have the ADP number. Now, the last time was 185. The market is expecting 200, right? So the forecast came out, the number came out was 208. Sorry, that was yesterday, my bad. And look at it, this is really, really bad. Okay, this is like showing the number still mounting up. That means that people are still hiring in a way, but that means that whatever Federal Reserve is trying to do now didn't really make it. So of course the confusion part is that, wait a minute, Cal, you say that the jobs are actually being taken up itself and the opening is going down. So what I'm trying to say? I'm trying to say is this, okay? The employments basically is actually still there. Okay, but the openings are getting lower. That means that, right, very, very soon, other jobs itself, right, may be affected. Okay, and then when people couldn't contribute to GDP, then obviously itself, right, that's what Federal Reserve want. The whole economy will go into a recession. Can you understand my point? A bit confusing, but that is the difference between the jobs opening versus the ADP, because ADP is a private sector. Now, the one I'm looking at itself will be the non-farm payroll, which is the public sector. Take a look. Now, the thing is this, the last time was 315. The market is basically forecasting 250. That means the market is looking at a lower number, all right? A lower number. So if the number basically goes below 200, that will means that, okay, the jobs are, people are getting lesser involved in the market, which is good for the Federal Reserve, but it's bad for the global economy. So can you understand my point now? I'm trying to drive. And of course, the confusion now is even greater is that when they look at this. But Cal, the last time we saw something like this, okay, the stock market went up, okay? So the stock market went up back in the time when it was whereby the jobs opening was coming down. Well, agree, but you must understand, that time itself, there was a influx of funds, a QE was involved back then. The QE of almost $5 trillion. The problem is that now itself, right, when this is happening, we are not having QE, we are having QT, which is quantitative tightening. So it's a very different thing right now. That's why you cannot compare apple versus orange. Because now if QT is happening and jobs are now getting lesser and people are not really working, then we will have that recession. And that is why I say that it's pretty clear to see why people are getting a bit worried, okay? All right, can I get my mouse over here? Okay, so if we move on. Okay, let me just clear my screen a little bit. Okay, so you look at it right now, right? OPEC has just pissed Biden off, really. Now, OPEC has decided to OPEC decided to slash crude output, and they are recommending as much as 2 million barrels, okay, per day. Wow. Think about this, okay? Think about this. Joe Biden has been pumping 1 million barrels per day so that he can actually fight inflation. But now OPEC has decided to come out with a 2 million barrel per day to reduce it by 2 million barrels. So isn't that fighting against just Joe Biden? Now think about that. And of course, what will happen to the crude oil price? Of course, it extended the gains. This is undeniable. So now the thing is, Biden is really upset, okay? He is definitely upset. Look at it right now. He's definitely disappointed, and they are angered, according to the Biden administration. Okay, so all these tells you that that their relationship is not there. And remember back about 2 months ago, I've been telling you this, once come October itself, right, definitely OPEC will reduce. And I said that, and it really happens. So all this information tells you that, why we are so bullish on crude oil recently. Here's your answer. Now, to me itself, right, the SPR, okay, the Strategic Petroleum Reserve is at the lowest level since 1984, and that was in September when we saw this article. And we can see that, right, the numbers are really coming down at a very alarming speed, because the last time we see a low number like this was back in 2001. And now it's still dipping down. And the thing is, according to this report right now, let me bring to you, okay, this one have been there since 1975, and the thing is that since 1984, the level has never went below 450 million barrels, never below that. But the thing is, now we went below it, and there is a chance that we may go even lower, and that is the frightening part itself. Now, you may ask, what's the big deal? Well, the big deal is this, guys, okay? Imagine now they have reduced so much itself, right? What must they do later? They must buy back again. And so what will happen? They'll buy from the open market. And if the open market basically did this, then what happened to crude oil price? It goes up, right? And what happened to the energy prices? Inflation? It will go up. So now we have a problem, okay? Because Biden has been releasing lots of oil, and that's why the so-called inflation, the CPI data has came down. And of course, the stock market got a bit of reprieve from there. But if, let's say, OPEC decided to do this itself, oh my God, think about this. What will happen when you see the inflation prices in the market keep on going higher, right? Okay, so let's just bring it to you right now and let you see what's happening here. All right. The thing is this, we all know that President Clinton, Obama, they really did that before they ever used SPR to ease the high gasoline prices during election time. So yes, indeed, the midterm election is coming right now is undeniable. And a very interesting history here, so I didn't know that. Usually it's the Democrats that will actually reduce while the Republican increase the SPR. But of course, we all know that Donald Trump also did that during his term, okay, to reduce inflation. But you must understand one key point. Clinton, Obama, Donald Trump, that time itself, inflation was no more than 3%. Now we are 8.2%. So think about this right now. It's a very different thing, okay? So you now understand why am I very concerned right now. Because look at the chart here, guys. Look at the chart. Now this is the Fibonacci chart that I have for you, okay, using this as a low, okay, A, okay, using A. And then we have B, that is the recent high, all right? Okay, so now let's take a look on the whole chart here, okay? Now, we have a very incredible support level at this $63. This $63 is a very strong support. Every time the market hits $63, every time the market rebound, okay? So that's why I use as point A. And of course, point B is the highest point, okay? So we have the Fibonacci retracement now. And very incredible, we have this 23.6, 38.2, 50, 61.8, and 78.6. Look at this now. When the crude oil came down, look at it at C. Interesting. The market actually stopped at 78.6. Wow, and that was a level that I really want because I was aiming at $75 and I missed it by just a couple of bucks. So if basically it's alright, this was the best time to buy crude oil and we missed it. But it's fine because now we have a second chance. You'll notice that at this area here, at about this area, which is somewhere about $85, okay, $85 cash market. It's a very interesting resistance and support level, okay? And the thing is now at the 61.8 is the $88 level, $88, okay? So how do I see this? Now, the market has stopped at 88, which is a 61.8 Fibonacci level, okay? So if the market couldn't go past 88, likelihood is going to put back down to about 85, and this will be the first level that I'm considering to buy a little bit. Now, of course, if it breaks 85, then it will come back down again to the 77 mark, okay, 77 mark. That will be a good time to buy back again. Now, the thing is that what could bring the oil price lower? Well, the only thing you can see it happening is that the whole world start to go into a recession and the demand for oil goes lower, then maybe we can see 77 trading again. But if let's say it's different story and demand supply plays into it itself because we're entering the winter period and energy prices, energy is something that people needs, right? So now if let's say, and plus let's say Russia come in to do some little funny thing itself, oh my God, then that means that the oil can go much higher, right? Yes. So from $88, the next target will be the next Fibo figure, and the next Fibo figure is at 96.22. So that is how I arrive with 96.22, okay? So traders, watch out for this. If crude oil spot market cash goes past 88.31, okay, that means the next target is 96.22. But the crucial part is that means that whatever Biden has been doing over this period of time by bringing the crude oil lower is going to be redundant. And of course, energy prices are going to go through the roof then. Now, of course, in the indicator form itself, it's pretty clear. Every time when the RSI is at the 30 zone itself, right, we can see it's reflective, it's strong. So which means that this is a bullish trend. I know that a lot of traders are saying that no, the market is coming down, right? Yeah, I understand. But from my perspective as a trader, I believe that this is a bullish positioning and this could bring crude oil price much higher. So I would love the crude oil to come down because of this global recession, because I'm basically more biased to the short side in the market. But to understand this, if let's say $88 breaks, then 96.22 will be next. Okay, so traders, you need to watch this very closely. Okay, so let's look at the chart right now for today and see what can we have. All right, let's take a look. Now let's take a look over here itself. This is my KFC chart. All right, we see a very interesting phenomenal support right here back at the start of June. Okay, so recently when the market Nasdaq broke below this figure, which is that there's this level here moment, okay, it's 1136.9. when it broke below it, I said that it will come back down to this area here, and the figure that I gave was 10,832, and amazingly that was where it exactly stopped. And then after that it rebounded all the way to the KFC level, and yesterday the market purposely tested it again and rebound. So what does it make out of here? So as long as Nasdaq stays above this figure, which is 11,369, okay, 11,369, the market is okay. The Nasdaq is fine. But please write it down somewhere. If the market loses 11,369, then the selling will bring it back down again to 10,832. Okay, this is something that you need to watch out for that. Okay, very, very important. Okay, now how about the Dow Jones? Now remember, I gave this theory about this. I've been sharing this to everybody, the 5% reduced method. Okay, now let's take a look in the long haul. Let's take a look. Okay, so let me explain this to you once again. Okay, let's take a look right now. This is 100, this is 95, this is 90, this is 85, this is 80. All right, now the thing is this, I split this 80 and 85 in the middle to get my 82.5, because I realized that this number is quite interesting. You can see that it got strong support when it was not able to go down. It rebounded, right? Okay, and I told you guys that if the same thing as we have from 80%, we have 75%, right? And I realized that the middle ground between 80% and the 75%, the 77.5, which is at 28,639, is a very critical number. And voila, look at it, guys. This is crazy TA. Look at it. That's why it's newish TA. Yeah? The market on 2 days, about a couple of days ago, the Dow Jones came down, hit that spot brilliantly, and rebounded. Oh my God. See that? And then when it actually recover, you notice that it got resisted exactly at this 30,487. In fact, yesterday high was 30,469. So I'm not half surprised that the market today or tomorrow may test the 30,487 to really hit those numbers, because you can see that it worked very nicely. But if the market get resisted here itself, then I'm so sorry, the pullback will be all the way back here again. The market should be pulling back all the way here, and that is going to be back to 29,563. So traders, you just need to watch out for this. Okay, very important. Okay, now how about China today? Now China has broke above the 13,000 very easily 2 days ago and break above the MA30, hence that's why it's moving up. But if you look carefully into our trending, if you put a trend line here itself, right? Okay, apologize on this color. Let me just change the color for you. Okay, we're done. All right, you can see that every time when the market failed to break this trend, it get pulled back. So I half wondering, will this happen today or tomorrow? If the market failed to goes above this trend, a pullback is kind of expected. And I say again, I believe that the China economy is still not going to do good. But of course, with the Ursula coming in, there is a chance that there's the government funds came in to buy, right? I think this was done by government funds. But the midpoint will be the critical part. If the market failed to hold the mid ground, which is like probably the MA30, then the selling is going to come back down again. Okay? All right, so that is something very important for all of us. Now let's look at the Dow today. Let me just refresh my charts with my TWB chart. Okay, so what we have right now is that we have a doji directional day today. So by right, this is first day, the second day, by the third day, we should see the Dow Jones hitting 30,742. So I'm just saying out loud here, if the Dow Jones stands and stays above 30,272, the OP of today, the Dow can really go all the way to 30,742. It can really go all the way here, okay, the upside itself. Now, interesting today, we have a bit of numbers, a bit of what they call stack. Now, pivot 2 is 30,269, right? Okay. And MA30 is 30,296. And my MA itself is 30,323. Now, which means that, right, we have about a 50-point stack here itself. Okay, basically, simply put, okay, once the market loses 30,269, I suspect that there will be some selling. Okay, I repeat myself one more time. If the Dow Jones do pull back and goes below 30,269, I suspect the Dow will pull back all the way to this point here itself, and that is about 29,675 zone. Okay, 29,675. But if the Dow Jones maintains its upside, because it's now above the pivot 2, it's above the MA and the MLP, then it could go all the way to 30,742. So traders, watch out for this. Now, indicator wise itself, right, the KSI is still red, and in fact it's an uptick red, so selling is there. But my KRW is showing a different angle, so that means that there's some buying at the moment right now, and you can see why the market went up. Okay, so we have a bit of mixed signal at the moment. Okay, now the Nasdaq, okay, the Nasdaq also has the BNB, and most likely now the KSI and the KRW are both in the positive side. There is a chance that the market could go for 11,772. Now, it is possible for the Nasdaq to test this point, that as long as it's maintained above pivot 2. Now, interesting again, the MLP today is 11,573, which is stacked nicely with the pivot 2 at 11,572, right? So as long as the market stays above 11,572, the Nasdaq, sorry, will be up. But if the Nasdaq breaks below this, I'm so sorry, the market will come back down again, and the figure for support will be roughly about 11,301. Okay, so watch out for this. This is crucial. Okay, this is crucial. S&P 500, okay, S&P 500 also had the same, almost exactly the same thing. So that means that Dow Jones, Nasdaq, and the S&P 500, all of them are doji directional day. That means big movement is coming in. Now, the upside potential is 38 for the S&P 500 based on my BNB 1x1. But interestingly, the P2 is 37.81 for today, and it's also again stacked with the MLP, right? So if the market loses 37.81, that means they're going to pull back down all the way to this point here, and this could be 36.98. 36.98. Okay, now both KSI and KW are in the positive side, so the upside potential to 38 is much stronger. Okay, now let's look at Hong Kong right now. Now Hong Kong has gapped up, and of course what happened was because of the strong recovery in China A50. But the thing is this, the for Hang Seng itself right now is actually kind of resisted by the KCB at 18,094, if I'm not wrong. Okay, anyway, the point is this. We have the market now sideways, and I think it will stay here for a while. The MA30 is 18,236, so that means that it's still kind of bearish at the moment. KSI is red, and its uptick means selling pressure, but the KRW has turned cyan, which means that there's some buying from the bottom. So traders, a bit of conflict here itself, just go slow. Yeah. Nikkei. Now Nikkei have rallied big time again. This is the of the doji directional day. Nikkei has blasted up the way. KSI green, and basically so the cyan has turned to flat yesterday. So overall it's still more positive than not. And what we have right now is the market stays broke above MA30 ML, and because it's a doji directional day, it's pushing up. Okay, so likelihood is because the dollar yen is actually moving a bit higher, and of course on the equity side itself, if the market can push through 27,426, it could go all the way up to 27,791. All right, it can go all the way. So if the Dow Jones actually goes up, there is a chance that we can see the Nikkei heading towards 27,791. Okay, all these are very important numbers. Please take note of this. If you need to repeat this again, do that. All right. Okay, so now let's continue. All right, let's look at the DAX. Is not open yet. Okay, let's go at the crude oil at the moment. Okay, now for crude oil, we can see right now crude oil for today itself, right, it has broke my level here, $86 already, so I can take this away. All right, so for today we can see that we really we missed the 75 level to buy, but now it has surged all the way to $87. This is CFD numbers. Okay, let me explain this now. Now, yesterday the market broke the BNB RL, right? The RL itself is at 86.51, and it broke it. So by right, as long as it stays above the RL, we should see mounting towards the 90.6 figure. But the moment now, right, there's a bit of pullback. Maybe it's just after a few days of rally, it's taking some profit. Okay, so ML at 86.57. So I'm gonna please play it here. If the market goes back down to ML because of some profit taking and stop there and start to rebound from here itself, then I can tell you this, it's gonna go up. Okay, if it hits ML, doesn't really go down further, it's gonna go up. And this upside itself, the first two stages itself is $88.75, and once it crosses that, the next target will be easily 90.6. And this is something crucial here. Take a look here. Now this is the entire month of September where the crude oil was being pushed down from the highest point, which is here at 90.11, and it went down all the way to 76.03. All right, that was the whole time the crude oil being pumped down, right, pushed down. But if the crude oil really goes to 90.60, that means that it will be higher than all the highs traded in September, and this is going to make people worry. Okay, so I'm not even half surprised that Biden and friends will purposely come in today just to bring it down a little bit. But again, they can only do it for a while, because after that itself, I believe the market forces is going to bring it up again. Okay, so that is my feel and take right now. And let's look at gold. Okay, gold price itself, right? Yesterday we mentioned that gold will come down, and it came down. Now today is some recovery. Now there is, of course, the dollar is actually one of the key signs. If the dollar is actually going downwards, then of course you can actually see gold going upwards. Let me just bring the chart in right now and just see whether we can find it for you. Okay, here we go. Alright, this is the dollar chart. As you can see, now the dollar yesterday rebounded strongly. This is why I've been calling for the short on gold. But today, this morning, it actually gapped down. I can't find the reason for that. But I believe that if all goes well, it can go back up again. And I still believe that the dollar is going to hit 114 to 115 region again. I still believe in that itself. Alright. And of course, if crude goes up, right, then OXY will be going higher. Now, from 2015 chart to 2018 chart to 2022 chart, you can see that OXY has a very incredible strong resistance around this area here. So I suspect that this $55 on OXY is the strongest base, and the upside itself can be as much as $80. I've been calling for that. So if crude oil price does bring it down a little bit, yeah, there's something I hope so, then it will be a great news, because if you put it somewhere around here, that will cover the gap right here, right, at about $62. And if all is good, the next tranche is going to go and break all the way to $80. Okay, I'm still very bullish on OXY. Okay, very, very bullish. Okay, all right, let's continue now. Okay, so that is gold, and let's look at silver. Let's look at silver now. Okay, where's my silver? Okay, now silver is doing pretty well. You can see that silver. Okay, silver is doing pretty well. Now silver has stayed above the $20 mark very, very nicely, and of course that proof and evidently tells you that what I suspect is silver is being cornered, and I think that silver is going to go up further in the next run. Okay, that means that next run, right, I expect this silver to be moving up again. Okay, I expect that to happen, and of course if this really happen, the next target could be 22-24 rather easily. So traders, do watch out for silver. Okay, I still believe that this guy has a lot of room to go, okay, for this counter of silver. Okay, all right, now if any time if silver pulls back because of whatever reason, because of the dollar itself, $19 to $18 will be your best time to buy, and this time around we look out for it, because nonetheless, it's alright. Eventually, the dollar will come back down when the interest rates have to come down, right? But it may take a few more months, but still, buying silver at $18 or $17 is a great steal. Okay, so consider doing that. Yeah? Very, very important. Alright, just give me a short moment while I do something on the side, because as I'm doing this right now, there are people texting me on the side asking me what's my view, and I just share them that I suspect that as long as the market stays above OP for the Dow Jones, we can see the market actually still going up. There's still room of going up. Yep. Okay, I'm done with silver. Let's look at the last two, is Bitcoin and Ethereum, and we can end this session. Now, we can see interesting. Let's take a look here now. You can see right now, the Ethereum is moving up right now. Yesterday, I shared with you guys, if Ethereum breaks below RL, the BNB, which is 1329, then it will bring it down all the way to the support level at 1260, right? That's what I said. But since the market has retained its strength above the BNB RL level, then yes, it's going to go up to 1397. 1397 will be the next target, okay? Now, Bitcoin, same thing here as well. I saw it coming down yesterday and resisted at 2041.1. So I believe that it's going to come back down to this point here, and that is at this 19646. But you can see the market just relentless, okay? And the KSI and the KCX tells me the bullishness at the moment now, and the market is seemingly testing it. So I'm not half surprised that the market is going to all the way up here to 2078 first before a pullback, okay? So I'm not going to be half surprised to see this happening. So traders, again, you need to watch out for all these signs, and hopefully that you can actually profit from it. Yep, okay? All right, I wish you all the best, everybody, in the market itself. Just remember this. I'm still looking at recession to come, but I suspect that the market is going to push it up a little bit more so that the boys can really sell it back to the retail as usual, because the Dow Jones chart tells me that there's still a little bit to go to about 30,563 zone for today. But once it hit the technical point itself, right, if you look at it itself, okay, the downside potential can be all the way down to 26,000. That's where I suspect that the Dow could be going in the next wave. All right, this is Cal signing off. Bye-bye.